Hello everyone, today my groupmates and I will present on Segmental report and Interim report. Let us begin with part A, which is Segmental report on Bank Sinar Surya Berhad. So I will start with the company's background. Bank Sinar Surya Berhad began its operation on 1st July 2006 and was listed on Bursa Malaysia in 2009. With an annual turnover of Rm500 million. Bank Sinar Surya Berhad is Malaysia's and Southeast Asia's second Sharia-compliant banking institution. Across the country, the bank has approximately 135 branches and 700 self-service terminals. It operates into 5 segments, which are consumer banking, corporate and commercial banking, treasury, group insurance and takaful, and lastly, shareholder units. It has played a significant role in the expansion of the country's Islamic banking industry. The bank has helped to create a number of Islamic institutions around the world. The primary business of the bank is Islamic banking and related services. Bank Sinar Surya Berhad offers banking and financial solutions that strictly follow Sharia guidelines and principles, as well as long-term prosperity and ESG value objectives. The Bank Sinar Surya Group's primary companies are PSS Investing Management Berhad and PSS Securities Sendian Berhad. Key figures in different Islamic financial services, including investment and stockbroking. The bank that advances prosperity for all is the company's vision. Furthermore, the company's purpose is to provide value-added solutions.
Now, I will explain about factors to consider to have a segment reporting. The first factor is nature of services. It can be defined as any action carried out by an entity with the primary goal of profit maximization. It can be reported in a variety of ways of report. Commercial banking is one of the examples of the nature of the business. The second factor is the type or class of customer. Understanding customer preferable by the type and class. Assist users and gain more understanding of the customer future cash flow, prospect, and assist users for better experience. The last one is the method to distribute their product and services, which anticipates the customer needs and preference and offer products and services as the client requirement, such as providing takaful and insurance services to the Bank Sinar Surya customers.
According to FAR570, an operating segment is a part of entity that engage in business activity to which it generate revenue or incur expenses, including inter-segment transaction. Bank Sinar Surya has 4 operating segments, which are corporate and commercial banking, treasury, group insurance and takaful, and consumer banking. Each segment offers different services. Our corporate and commercial banking encompasses non-retail. It includes corporate finance activities, financings, deposit, and other transactions and balances with corporate customer, commercial customer, and small and medium enterprises. Second, treasury. Treasury undertakes funding activities through borrowing and investing in liquid assets such as short-term placement and corporate and government debt securities. Next, group insurance and takaful. It comprises the business of underwriting all classes of general and life insurance business, offshore investment life insurance business, general takaful, and family takaful business. And lastly, our consumer banking segment encompasses retail such as financing, deposit, and other transaction and balances retail customer.
Chief of Decision Making (CODM) and its responsibility. Finding CODM is a crucial step in figuring out entities' operating segments. According to MFRS 8, Principal Operating Decision Maker refers to a function rather than specific executive role. The function is to allocate resources to operating segments and monitoring their performance. However, finding CODM can be more difficult because of the relevant functions depends on the management structure and procedures of the company. The entity chief executive, chief operating officer, senior management group, or board of directors, for instance, may perform the CODM job. The CODM will typically be the highest level of management at which decisions are taken. But if a supervisory body is needed to approve those choices, it is up to the CODM to decide whether or not it is doing so. Generally, the responsibility of CODM is to evaluate the performance of different segments, to determine the existence of manager accountable for the business activities, identify the nature of business as a service, and to allocate resources to the segment. For Bank Sinar Surya Berhad, the CODM are led by Chief Executive Officer Tan Sri Dr. Halim Suhaimi, which is responsible in making major corporate decisions and managing the overall operation and resources of a company. As for Chief Operating Officer, is led by Encik Muhammad Rozi, responsible in maintaining the daily operation of the business and report to the CEO about the company's daily operation. Senior management team is led by Encik Ahmad Nur Azri, who is responsible in organizing the management of resources within the firm and setting ambitious and achievable goals. For the Syariah Supervisory Council, Professor Dr. Ahmad Rafidi is responsible in planning procedure to adopted by Islamic banking and financial institutions.
Following that is the method for identifying reportable and non-reportable segments, which should be done by implementing the quantitative threshold test of 10% and 75%. Following the identification of the operating segments, the following steps involves putting them through a quantitative 10% threshold test. This is done in order to decide which operating segments should be included in the financial statement. If any of the quantitative thresholds are reached, BSS Sdn Berhad report separately on their operating segments. There are 3 tests, which are revenue basis, profit basis, and asset basis. As shown, the first is a revenue basis, in which reported revenue accounts for 10% or more of a total revenue, both internal and external, across all operating segments. The profit basis, which reported profit or loss in 10% or more of the greater of, first, the combined profit of all operating segments that did not report a loss. Second, the combined loss of all operating segments that did report a loss in absolute terms. Lastly, the asset basis is used when assets accounts for 10% or more of total asset across all operating segments. So next, this is the formula used to calculate the 10% threshold test. You can see from the table, we use the revenue basis to establish the reportable segments for this company, with segments considered reportable if they generate 10% or more of the total internal and external revenue of all operating segments. BSS Berhad has 4 reportable segments, which are consumer banking, commercial and corporate banking, treasury, and lastly, group insurance and takaful. As shown in the table, the consumer banking received 38.43%, corporate and commercial banking received 16.6%, treasury received 24.07%, and group insurance and takaful received 13.63%, when their reported revenue fulfills the 10% threshold test. So next, as you can see in summary, the previous computation shows that there are 4 reportable segments and 1 non-reportable segments, which is the shareholder units. So moving on, next is the 75% threshold test, which is used to establish if the external revenue reported by the operating segments amounts to 75% or more of the entity's total revenue. If it is less than 75%, even if the quantitative threshold is not fulfilled, further operating segments must be identified as reportable. So next, as you can see, based on the previous computation table, the amount is applied to the formula of total external revenue of reportable segments divided by total revenue multiplied by 100. As shown in the calculation beside me, the external revenue is Rm 3,403,457 and the total revenue is Rm 3,667,777, yielding a result of 92 62.76%, which is greater than 75%. As a result, the external revenue of the selected operating segments accounts for more than 75% of total revenue, and no more operating segments that fails the 10% threshold test will be required to meet the 75% threshold. I will proceed with our segmental report, which is shown beside me, which we constructed after identifying the reportable segments of Bank Sinar Surya Berhad using the revenue basis and calculating it using the 10% and 75% threshold test. As you can see, we consider consumer banking, commercial and corporate banking, treasury, and group insurance and takaful as reportable segments of the company, whereas the non-reportable segments of the company are shareholder units. The overall revenue is Rm 3,667,777 according to this new segmental report. Next is the continuation from the previous segmental report. As you can see in this report also, we discovered that the profit of the year is Rm 792,426, whereas the segment assets are 90,797,573 and the segment liabilities are Rm 56,789,432.
Next, I will explain about the advantages and disadvantages of segmental reporting with respect to the company. For advantages, the first one is to gain better understanding. When financial statements are presented in segments, they are easy to interpret. It also helps in better understanding organizational performance and assessing overall outcomes. Next, value creation. By attaining growth in sales from the various segments, the company may increase the profitability and produce long-lasting value for its stakeholders. The third one, useful for decision making. Give investors and creditors important details so they may make wise investment choices. Investors are provided with comprehensive details on the unit's profitability. And the last one is risk and return assessments. Lenders and investors can evaluate data relating to the segments related with investment or lending alternative to determine the risk and returns of the company. For the disadvantages, the first one is intense competition. As competitors will learn sensitive information about the company's profitability, it would harm the company's capacity to compete. Competitors will endanger the business by using the information to their advantage. The second one is data manipulation. The perspective that management wants the users to see allows for both manipulation and reporting of the summative reporting data. Some reporting, for instance, lends itself to data manipulation if the data is presented in Gini management's I form. As a result, the financial statement of the users will portray the company's performance inaccurately. The third one is incur high costs. The expenses to the corporation of giving segment information to outside consumers could be higher. The fourth one is higher pressure. The management is under more pressure to ensure that the information is beneficial to the users when preparing information for the all segments.
Next, we'll get into part B, which is interim reporting on Bank Islam Berhad. An interim financial report is a financial report that contains either a complete or condensed set of financial statements for a period shorter than an enemy full financial year. This standard does not specify which entity, how frequently, or how soon after the end of an interim period the interim financial report must be published. Entities can choose either to present a complete set of financial statements that defined by MFRS 101 or condensed sets of financial statements that contain a condensed balance sheet, a condensed income statement, condensed statement of changes in equity, a condensed cash flow statement, and selected explanatory notes. There are 2 points of view about how interim financial statements to be prepared. The first is the integral method, which holds that each interim period is an integral part of the annual accounting period. The discrete method is the second approach to preparing interim statements. Integral method is that each interim period is an integral part of the annual accounting period. Under the integral method, annual operating expenses are estimated then allocated to the interim period based on the forecasted revenue or sales volume. In other words, costs incurred that clearly benefit the whole year are assigned to the interim periods based on the revenue or sales volume forecasted for the year. Using the integral method would result in interim income that is more indicative of annual income, making it useful for forecasting future operational processes and making informed decisions. The discrete method is that each interim period is a basic accounting period, and the result of operations must be determined in the same manner as if the interim period were an annual accounting period. Reports prepared are based on periodic basis. According to discrete method, each interim period is considered a discrete or separate accounting period with a status of financial year. In other statement, unless deferral or accrual is permitted in the annual financial statement, annual operating expenses are recognized in the interim period in which they are incurred, regardless of the number of the interim period benefited. As for example, a company incurs all its rental expenses amount 16,000 ringgit in the first quarter of the financial year but none in the subsequent 3-quarter year. For discrete method, the rental expenses shall be recognized as expenses when incurred. The entire rental expenses will be charged out as expenses in measuring the first quarter interim result but none in subsequent 3 quarters. For integral methods, the rental expenses incurred in the first quarter of the year shall be allocated ratably between the 4 quarters of the financial year. Based on the interim reports of Bank Islam Malaysia Berhad, the company used discrete method in order to prepare the interim reports. Reports were prepared quarterly on the periodic basis of 3 months of each quarter.
Next, accounting policy used in preparing interim reports. Based on the interim report for the year ended 31st December 2021 of Bank Islam Malaysia Berhad, they are using accounting policy according to MFRS 1 SID, which is lease, and MFRS 11 SID, which is property, plant, and equipment. Lease can be defined as a contract or a part of a contract that conveys to the customer the right of use an asset for a period of time in exchange for consideration. In lease, there are 2 fundamental approaches, which are lessee and lessor. For lessee, Bank Islam recognizes the right of use asset and lease liability on the statement of financial position. The right of use will be measured at cost, while for liability, subsequent to initial measurement, the liability will be reduced for payment made and increased for profit expenses. While for lessor, they recognize asset held under finance lease in its statement of financial position as a receivable at an amount equal to the net investment in the lease. Bank Islam has a lessor classify its lease either operating or finance lease. If it transfers substantially all the risk and reward of the ownership, it will be classified as finance lease, and if it does not, it will be classified as operating lease. For MFRS 116, the recognition of property, plant, and equipment is when it is probable that future economic benefits associated with the asset will flow to the entity and the cost or value of the asset can be measured reliably. Bank Islam Malaysia Berhad measure at its cost model, which is cost less accumulated depreciation and accumulated impairment losses. They are adopted on a straight-line basis over its estimated useful life. It will be recognized in profit or loss statement and will be reported at the end of accounting period.
Type of interim reporting, there are 3 types of interim reporting, which is semi-annually, quarterly, and bi-monthly. Bank Islam Berhad uses quarterly interim reports. A quarterly report is a summary or collection of unaudited financial statements such as balance sheets, income statements, and cash flow statement issued by the companies every quarter, that is 3 months.
Following that is the period for the current and comparative statements prepared by the company. Bank Islam Malaysia Berhad prepares quarterly financial statements for the year that ends on 31st December 2021. According to MFRS 134, interim reporting, the current and comparative period for each of the company's statement will be measured from 1st January 2021 to 31st December 2021, which is equivalent to the first interim quarter. Next, as shown in the table, we will start with Statement of Financial Position, which includes a current interim report from 1st January 2021 until 31st December 2021 for a reporting period of 12 months, as well as a comparative year-to-end report from 1st January 2020 until 31st December 2020 with a reporting period of 12 months. Second statement is Statement of Profit and Loss and Other Comprehensive Income. That has a current interim from 1st October 2021 until 31st December 2021 with a reporting period of 3 months, and a cumulative from 1st January 2021 until 31st December 2021 with a reporting period of 12 months. For comparative, the current interim is from 1st October 2020 until 31st October 2020 with a reporting period of 3 months. Also, the cumulative year-to-date is from 1st January 2020 until 31st December 2020 for a reporting period of 12 months. Lastly, as for the statement of changes in equity and statement of cash flow is the same, where the cumulative, which is year-to-date, is from 1st January 2021 until 31st December 2021 with a reporting period of 12 months. Also, the comparative, which is year-to-date from 1st January 2020 until 31st December 2020 with a reporting period of 12 months.
Adjustment number 1. Since Bank Islam is a large firm, using reducing balance method is more advantageous to the company rather than straight line method. It is because assets that have been in operation for a while require frequent maintenance and repair. On 1st January 2020, Bank Islam Malaysia Berhad purchased office equipment costing 32,100,000. Bank Islam estimates that the office equipment will lose its value by 40% each year and have a residual value of 100,000. Before adjustment, using straight line method, the accumulated depreciation as at 31st December 2021 is 25,600,000. After adjustment using reducing balance method, the accumulated depreciation as at 31st December 2021 is 20,480,000. As a result, as time goes on, the cost of depreciation on profit and loss statement rises along with the assets maintenance and repair expenditures. By using reducing balance method to calculate depreciation, Bank Islam Malaysia Berhad can increase the profit by 5,120 ringgit.
For the second adjustment, we propose BIMB to dispose of its asset because the business will get the benefit from disposal. The benefits that BIMB can get if they dispose their asset is that BIMB can replace old or unusable assets with the new ones that can bring in more revenue and add more value to the business. Next, when BIMB dispose unneeded asset by selling, it can save up cash to invest in other areas of the business. And the last one is that BIMB will have no longer to bear for the repair and maintenance costs for the asset. 1st January 2021, motor vehicle costing 943,000 with the accumulated depreciation amounted to 794,000 as at 1st January 2021. The company depreciated the motor vehicle using a straight line method and monthly basis with a useful life of 5 years. On 1st October 2021, the company decided to dispose one of the vehicle with a carrying amount of 200,000. The vehicle has been used for 2 years. Before the adjustment, BIMB cannot generate any revenue from the asset, but they need to spend on the expenses because of the depreciation of the year. After the adjustment was made, BIMB can increase their revenue from selling the asset and decrease their expenses because they don't need to calculate the depreciation after the disposal. For the conclusion, BIMB should choose to dispose of their asset once it is unneeded asset because it can increase the revenue. If they choose to dispose of the asset, they can save up to 12,417 on the depreciation because the asset will not be depreciated once it is disposed.